Hey, hey, hey! Good morning, York. Good afternoon, London. Wherever you are in the world, welcome. Another true live scalping stream with the Forex team, bringing you real pips, real time, 3-minute time frames, no messing around, proper trading, in and out. How we do things is in our boutique axe trading system. It's just been recently updated. We've got some new indicators, new things on here. It's an amazing system. You don't need anything else ever again. TradingView, there's so many different options. This is just one setup that I use and have been extremely profitable with. And as always, if you want information on how to gain access to this indicator system and our mentorship, www.forex.com. Information is in the YouTube channel below as well. So today's stream, we are going to be focusing on the balance of trade news, which is going to be about 7 minutes time, 6 minutes, 7 minutes time. As you can see, there it is, 5 minutes, balance of trade. We'll wait for that result to come out and see which way DAX or DAX or US-30 pulls. Gold as well. The three main things. The reason I've been doing DAX is I've been doing a small account challenge again. This is our second week of starting the Monday with a $600 account. Last week we just about doubled it. We got up to about $1,180. So that was a success. So we took that out and we started again with $602 yesterday. Right, Monday, and we're already on 816 and 87. And yesterday's trading and the European London Open today. So already, well up percentage-wise, way more than most traders beam off on such a small account. We're using the smallest lot sizes on IC markets, leverage of 1 to 500. So we're just using one lot on DAX. And there will have to be one on US-30. You don't get as much for the move on US-30. And on gold, again, it's going to be something like 0.3, 0.6 if you want to trade using that account size. So you get asked to do a smaller account. Yes, people try it with $50 and whatever. This is what I call a small account, but gives you enough leeway to open 3 or 4 trades same time. You also still have room to open extra trades to get you out of a sticky situation if the market goes against you, so you can end up breaking even or getting a small win rather than just sitting there watching your trade go against you and then deciding to end. Now the good thing with our axe trading system is with all these indicators and things we've got now, we've got plenty of opportunities to look for entry points and exit points when it comes to news events and market opens and general scalping. Our RSI system, got a trend bar, a couple of trend line setups, indicators giving us signals, and yeah, we've got reversal indicators now. These are new ones that have been really effective for scalping reversals. We've got our baseline, and we've got our good old favourite, the VWAP. I always use on Cs and stocks, give us a kind of a bigger picture of where we are. Our baseline is for micro scalping, our VWAP is for bigger daily picture. Full bear run and low. A lot of traders used to bounce off and enter VWAP. And that's it really. As you can see, US-30 came from a big drop off from yesterday, pulled back some heavy zone, as you can see, our zone neutral resistance and our 2 blue bands of resistance. So price obviously smashed against that and down again. Nice indicator here is our trend line break, sell, and there was one for the buy, hasn't happened yet because it needs to cross up, and our second trend line buy. So it depends what happens with this balance of trade. That's if you're doing US-30. DAX, this is going to be an experiment to see if the US balance of trade has any influence in the stock market, and it usually does. I know you might think, hey, what's the balance of trade? got to do with, but obviously they're quite heavily synced, and DAX is the biggest traded stock market in Europe. So and you can see the setup is pretty similar. The kind of pattern we're looking at is very, very similar on both indices at the moment. So again, depending on the news result, look, coming out now, about 1 minute to go, and we'll see where we go with it. US-30 DAX. So we're just going to load up broker, make sure we're on DAX at the moment, say one lot size, and if not we go for US-30 again on lot, which is 0.1 broker, just the way you see markets. It's not actually one standard N, one standard one on there, it is actually just not doing Lambo lots. I'm thinking of doing crazy Lambos with smaller. So let's see what this result brings, and like I say, we don't rush in. I'm just grabbing my coffee, we'll see what happens. See if the RSI actually takes a move on anything. We get the result. Just waiting for it to now. And again, we just want to see whether it's better or worse than expected. Okay. So as you can see, look, it's in DAX up. News is better than expected. 87.1 is what I'm saying. So let's see. Get a push or reversal. The US-30 is the usual thing. Reversal, we're right sat on level of support, so we need to wait. It's just popped out the neutral zone. See, it's trying to drop down there. See if we, like I say, it's only going to be small because US-30 is quite harsh in terms of margin, which with the most expensive indices to do on a CFD, any broker, bigger account really than 600-700. Clear out, and we're done. Yes, there you go, we won. So we took the sell on US-30. There you go, on that news. It was better expected. See, highly expected figure is positive for the US dollar, and lower, took the sell, and what did we get? We got 6, 7, 7, 4 and 4, so we got about $30 on that. And remember, this is an $800 account, so that's a big percentage win. Well happy with that. Oops. Again, just went in with one standard, no drawdown on that.
Utility bills for household costs rather than from petrol or gasoline costs. So that's where the pinch comes differently.
Don't get as many pips for your book on the US-30, but you have to trade what you have to trade. The right thing to trade with a balance of trade, so to speak. There you go. So that was the sell. Nice and easy. Is going to push down lower, we see. Watch that line, see if we get a reversal or anything. Well,
what's driving real disposable incomes, and it's the squeeze that we're feeling on the consumer, which is
don't push down. The RSI is 37. Let's also look at DAX as well. Oh, and DAX did the same. Excellent. So DAX did respond exactly the same way. That is good to know.
So people,
and trade that
the
well.
man on the street doesn't look too much at core inflation. They're worried about headline inflation. They are worried about petrol prices or gasoline prices, and that's what's going to drive inflation expectations higher. At the moment, it's not happening. There isn't a big increase.
Going to push down, so that's good. Good to know. Again, it was just an experiment to see it does affect and get the same way, kind of the market reversals.
That headline is the
not in any position. David, waiting to see if there's a break.
That study that came out yesterday, when you take a look at the 1980s inflationary
trade news,
the spending habits of today, you got something very similar to what we're looking at now, the peak as calculated by this study.
Like I say, good news equals sell. Usually on most of these things, pre-market.
9.1% versus the 6.2% CPI print that we've seen on the core level. Do you view that as a likely comparison that gives a sense of how much?
So that's took us to a win at we're 128 today. Pretty good.
Yes, I mean, I think the
See
Fed's
what happens.
first interim target
Further
is
push
whether or not
down.
they
It's
can
on
truly
support level
outperform
here.
inflation. I mean, very clearly the reason we're here is from a lot of external shocks, and that's the case with a lot of the
DAX as
economies.
well.
But you've got oil
DAX is the one that's a risk.
prices,
It's sat on a support level, but we
you've
don't
got
know
the potential for a gas problem coming through in the fourth
wrong
quarter, and you've
move's
got
going to
supply chain
be.
issues. Now, the Fed can do
So I
little about
just
that,
clipping
probably won't
plastic.
worry too much about that. It will assume
See on
over
this.
the next couple of years that those issues
So
will
let's just
stay
see if
back.
Bloomberg
What the Fed has to
saying
worry
any
about is the fact
well.
that domestically generated inflation is so high, and that's coming from a tight labour market. Now, from that perspective, what they need to do is slow the economy.
You can see the result there, 87.1, so better than expected. Trade deficit.
The Fed has been at making that very fine-tuned adjustment over the last several decades. So it's a huge challenge. And I think over the summer, particularly as markets try and second guess exactly what the positions are going to be, it's going to be very difficult for the Fed to keep.
30. I just want to see if Bloomberg say anything about it.
Yeah, of course, but economy, but not so tight as to tip them into a more outright recession.
And part of this is how quickly the Fed wants to get inflation back down to that 2% target. We've been talking about this for months, about whether they're going to be
okay, that was a nice win. That was beautiful.
Next year, or even 5%, or whether that will be a little
nice, easy win. Just 4 positions.
At what point do you see them?
You don't need to go crazy on trading news events. Just want to get in, get the first win, and then
by the end of next year.
No, I don't
get out of the trade.
For that, I think it's going to be you'd see a very sharp adjustment to get it coming back to that sort of level. So I think they've realistically got to be looking at getting inflation back on track by 2024. So they've got to be confident in their forecasts that inflation is going to be back.
That's it for news, really, for today until the API crude oil later on. At 9:30, the end of New York session May. Trade that, but obviously stick here, trade the open. We're just going to watch and see if we get in any movement on DAX.
So it is going to be quite a slow process.
Like it's going to push down.
When you look upwards, but we're coming from 8.5%
at that level there.
Higher. So we are going to be looking at inflation falling back quite quickly. It's
just
a couple of
dollars.
A while to get back to target.
Where's the value opportunity here? We've had a repricing of any given ratio you want to look at. Is the value opportunity the United Kingdom? Is the value opportunity America or continental Europe?
No, I think we might have to look even further afield than that. I mean, I think Europe is
going to be little trades on that one again, just small because of 20 on small lots.
We really don't know.
Yeah, there's another like $10 there
Right.
on the sell.
So where are you going?
So then we start thinking a little bit further beyond that, and we're looking, to see whether or not emerging markets can make some pickup.
So critically, do you need a weak dollar to own
US-30, US-30?
The dollar not to be moving
around a little bit.
And I think the risks are that as we see those risks emerge, particularly if we see anything nasty happen in terms of China COVID again.
That's put us at 134.24 for the day.
On a number of occasions, it picks up again quite quickly. If we see risks in multiple parts,
we're starting from 700. Easy. Well, happy.
Pick up even above and beyond, what we'd expect in terms of fundamentals.
What's your most contrarian call, David?
What's our most contrarian call? Well, I think we're
watch US-30 on this. So have a quick look at gold.
No preset
Switch to gold.
For recession.
See what gold did.
We're hearing a lot about the early doors of the straws in the window of a recessionary period.
Sell as well.
I don't think there's anything at this stage.
It was your news result.
To an outright recession. It really does depend on whether or not the
again that's more like it.
Manages expectations over the next couple of meetings. So our view at the moment is that we avoid
went with the news event.
But that probably means that the Fed stops much sooner than markets are thinking. We think that by the end of this year at 275, the Fed will have to stop.
Ready gold, that was a nice easy sell as well.
The Fed is materially above a restrictive rate or anything else at that point. It's primarily because we think financial conditions are going to be tightening quite quickly over that final half.
Do you actually think that that's out of consensus? Do you think that currently a recession is being priced into U.S. equity markets?
It was an easy news release to follow. We'll just get ready for the open now.
Listening to your show all morning, I think there's
see what US-30 is doing, kind of ranging around. Gold's now bouncing off the VWAP neutral support, so watch out for that.
But what people say say and what they do are two different things. Are you saying that there's sort of an overly bearish sort of tilt to some of the Wall Street analyses and perhaps some television shows, and that perhaps in reality that's not what people are baking in the pricing of assets on the ground?
Yes, I think that
Distance
at the moment
here,
there's no
so
pricing for a recession, but I think everybody recognises that
it's pre-markets. It's always a slow move.
It doesn't take too much, and I think when we see Fed Chair Powell speaking in a week or so's time, I think he is going to have to be a little bit more hawkish than markets are expecting, and that's going to tighten those conditions again. We've had a little bit of a relief rally, I think. In
See
terms
our
of
wick and our
what
trend
the
line
Fed
there
might
as
do
well.
over the last 3 weeks, and I'm not convinced that that's
Formed
going
it
to be the
going up.
decision
There's
the Fed wants
trend
to
line
make.
just automatically flipped in there, which is pretty cool.
Over Warwickshire, and
Give us a
David
level.
Page and John Farrow doing it up. And so, John, I dive into Coventry Live, and they're not even talking about Coventry. They're talking about Cardiff and the Tots, and where Gareth Bale is going to land.
Is that the lead story, Tom? On
It
the
is.
sports
That's the lead
pages?
story in Coventry is Gareth off to Cardiff.
I think you're more interested in that than the people of Cardiff.
I know. I mean, Blanchflower away on this, I'm sure. I
He
mean,
got his country into the World Cup, Tom. Fantastic.
it's
Yeah,
great.
yeah, well
I mean,
done.
Motherland is going to go to the World Cup, and that's fine. But John,
Thoughts?
importantly here,
Sure.
does Bale
Those
go
are
and be a
USD
national hero and drag Cardiff
gold.
back to Premier League, go up a league?
So that was a good one. That was an easy one to come out with. Like I say, news was better than expected. So obviously we go reverse
I'm not
most
sure
of the
where Gareth
time.
Bale fits into that,
Yeah.
Tom.
And
That would be a one-year transfer.
David,
and I'm
thoughts?
old, yeah,
What's
definitely
amazing,
did.
David, is that he's
Nice
only
drop
32. He's 33 later
off.
this summer.
Yeah, I mean, it's his career
So
is
kind
a
of round
mystery.
about here.
At some
He's
point,
got
somebody
100
should have said
pips.
to him, go to a team where you're
Old.
going to play because you're going to
Points,
miss
10
those
pips.
years for so many
Same on
you know,
US-30.
when you grow out of this.
John, that's what Lisa said to me in Davos. I overheard her in the
What did she say?
restaurant.
Go
She said,
somewhere else.
"Tom,
Down.
his career is a mystery."
It's a mystery. You should go somewhere else. David Page of AXA Investment Managers. David, thank you. As I almost spat out my water, it just reminded me of something.
God you didn't
I'm
waste
not
the
going to name the
tang.
guest. It would be so unfair for me to name the guest. I just remember the three of us were sat in a radio studio in February 2020, and a guest came in and looked at the
You're
three of us and
moving
said,
up
"You're
quite
just so
nicely."
depressing this morning." It's just so depressing.
remember
Things.
that.
Do you remember this?
Yes,
do you remember
I do
this?
remember this.
It's just so depressing. Things are going to be so much better than you think they are. And wow, they were so much worse, Lisa.
You know, hold on a second. But I also think that, honestly, sometimes, Tom, you'll say to me, oh, you sound so bearish. I'm not so bearish. Sometimes I'm just asking questions. I mean, sometimes I'm just trying to find out where the holes are in certain
With a
people's
bearish
optimism,
tilt.
where the corners are.
When
that
you
can
ask
see
about
around
the
them.
balance of risk, they're predominantly about the downside risks and not the potential for upside risks. Is that fair?
Maybe.
Maybe. Do you want to get some price action?
Please.
It's always available. Futures are down 0.9%. I needed some of that earlier.
Down.
The Nasdaq down by 1.26%. We're pulling back once again as Target spooks investors just a little bit once again. If you experienced this 3 weeks ago, it feels familiar. It's because it's happening again in 3 weeks, twice. Target has had to cut the profit outlook and the stock is down and down hard in the pre-market. Off the lows, we were down about 10% of the lows. We're down by 7.4% now. That's a single name story. That's one stock, but it's one fear too, that this is more than just Target, Tom, that this is a bigger story. And we touched on this briefly moments ago.
Yeah.
It's tremendously difficult to get a macro signal from these guys right now because when you listen to the signal from the C-suite, when they talk about their company, they don't talk about the strength of the consumer. They talk about the changing basket of the consumer.
Yes.
That's different than
Yes.
just saying the consumer's weaker because inflation is higher.
And the problem I have with the media gloom on recession is as one of our guests mentioned, maybe Vince Reinhardt, there's discussion of a growth recession which hammers certain deciles harder than others.
David Malpass is going to weigh in on this, that the president of the World Bank in the next
You
hour
gotta book Blanchflower.
on Bloomberg TV. Danny will be on soon.
Yeah, we'll get
He's
Danny.
very upset about these recession forecasts. He's basically saying it's guessonomics and here we are. The weakness is
he's
here
correct.
right now. It's not round the corner. Danny's got a lot to say. Doesn't think the Fed should be hiking either, Tom.
Yeah, well,
Shocker.
you know, we know that. He's dovish.
We do know that. Down 3 basis points on a 10-year, 3% just about. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Boris Johnson is trying to draw a line under the controversy that's been threatening his leadership, but the scale of a mutiny against the British Prime Minister suggests his days may be numbered. Johnson survived a confidence vote by members of his own Conservative
This
Party.
price action, see if we're going to get a push up.
MPs voted against him. Johnson now says it's time to get back to helping people with the cost of living. Hong Kong won't tighten coronavirus restrictions before the city's July 1st handover anniversary. That's according to
So we've got
Chief
45 minutes till the open.
There's been speculation that that China's President Xi Jinping might attend the celebrations. Hong Kong's COVID cases have been rising since the city began rolling back social distancing curbs. And tourists visiting Japan may be sent
It's
home
really
with
going to just be
video
arranged
calls on
now.
wearing masks
While
and sanitizing
looks
their
at,
hands.
that was the
They
move
also
on the
must
new
buy
that little
private
drop
health
down there.
insurance.
We
Japan
took
is set to
sell,
open
and that was
liquor
it.
stores starting this Friday.
Enough to
Borders
get
have
us a
mostly
few
been closed
pips.
to tourists since
What you
early
need to do, look,
2020.
play the movement.
Citigroup will hire about 3,000 employees for its institutional business in Asia. The new staff will work in areas including investment, corporate and commercial banking. The bulk of them will work in Hong Kong and Singapore. There will also be new jobs in India, South Korea, China and Australia. Apple has unveiled the most significant overhaul to its popular MacBook Air laptop in more than a decade. It features a fresh design, new colors, and a speedier processor from its homegrown
Our baseline, got our trend line, got our points of interest.
Annual Developers Conference. Global News 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
There's just no trade on this until the open. We'll watch. Six seconds to go on this candle. We're in a wedge, as you can see, look, wrapped, bottomed out, trend line full. So we could get another signal. So, like I say, when you get these signals, they're only good once you get a break of your level. The signal came, now it's coming here. So
when you think space, you probably think one space agency that travels under the radar is ESA.
see now,
Which is
get a
surprising
buy.
considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. And the place where we are going to learn to do that is on the moon.
Can ESA help
Wait for the
humanity
RSI to go
take
into the
its
neutral.
next giant leap?
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
If it breaks this, then we're going up.
Energy prices and
Disappears, we're coming down.
Chemicals that produce synthetic fertilizers are sending pig, cow, and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertilizer helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the
Just on our average,
manure, and the
see
soil
here.
breaks down into a
So we're just
friable
waiting, hanging.
mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
I think the White House's message is pretty good. They are
Right, and
clear
again,
that inflation is
push.
high and that it's hurting. They are clear
Got a
that the
double
primary
trend line.
responsibility for bringing inflation down is the Fed, and they're clear that it's not going to be coming down instantly. I appreciate and admire that Secretary Yellen said that she made a mistake. I think we should have more confidence in her for her willingness to admit error.
I haven't seen off it, look.
Furman, who visited us in Davos, and that is a tour de force interview. And if you would like more of this in the Wall Street Journal today, Jason Furman does what he is famous for, which is lining up the ducks with immense precision.
Trend line, look, you can see in that wedge.
Compares inflation in the United States with the things in Europe that are
Going to go with
where
the news, as we said, the sell.
About it. Part of that is
back.
an indicator of what the tea leaves are doing, including weak yen. Kriti Gupta on yen.
On yen against the Australian dollar, or I should say the Aussie dollar against the Japanese yen, which, Tom, is my favorite risk gauge when you look at what the implications are, what direction it's pointing to for things like the stock market, like high yield spreads, for example. The Australian dollar having that strong correlation with commodities and commodity exports, of course, the Japanese yen being that strategic haven.
Again, it's doing the same pattern as US-30.
Part of the day, we are looking at that currency pair
going down for the news. That's a trade, trying to break levels again.
Until you come to November 2021, which is really that peak that you saw in the stock market before you had this big bear market that followed. And look at what the Australian dollar versus Japanese yen is doing. To our radio audience, it's going up, 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 while the stock market went down, 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 except in the last couple of weeks where you have seen this reversal. The question, though, is this reversal that you're now seeing in the stock market and the currency market, how much of that is coming from the signals of the RBA and the BOJ? Of course, we know the RBA also hiking rates unexpectedly by more of a margin overnight, Tom.
Kriti Gupta, thank you so much. Barry Ritholtz is far too young to remember the miracle of C.J. Lawrence research and one Edward S. Hyman. It was absolutely original, the granularity of Ed Hyman in parsing out inflation. And instead of the Friday inflation report, which is above the headline, maybe with a little treatment on apparel and other things, Barry Ritholtz has been looking at the microdata of inflation. Barry, what do you see?
So, it's interesting that everybody is so focused on what the Fed is doing to fight inflation, but the vast majority
Tighten this wedge, it's going to break one way or the other.
Still, the hangover effect.
Our breakout zone, as you can see, heavy support and distance, so again, it's just wrapped.
Goods-based economy during the
That's
pandemic.
Broken.
We're still
move to the side.
The mess that
Gonna push.
created, and that has nothing to do with where the Fed is putting rates. That's going to work its way. The pig is working its way through the python, and it's going to take a while before that finishes resolving. I like to say transitory is taking longer than expected.
Okay, it's longer than expected, but the answer is we've got a core inflation of 6%. What is the makeup of that core inflation?
So a lot of that is obviously food and energy, which was already elevated before the invasion of Ukraine, which sent those prices even higher. We're going to be dealing with this for as long, elevated prices, at least in part for as long as that war continues. But, when you look at how the economy shifted during the lockdown, and then so you had a surge in demand for goods during 18 months, and then we reopen, and now there's a surge in demand for services. So when you look at airline tickets or vacation, try to get a hotel room in New York City, we went from one extreme, which was a 20% increase in demand for goods, which really
Coming to the end of the wedge. Where's it going to go?
And made a lot of pre-existing
The trend indicators are pretty good. You can see our trend bar is grey, so it's still undecided.
We're going to raise rates, and that was before price of energy went up, and now you're seeing an energy surcharge on top of it. So the same situation
30 going to have a little bit of push up.
We're now seeing in services as we're reopening.
Barry, why have markets gotten this so wrong, as we can see by the share price reaction to Target, frankly, to Walmart, to Amazon, adjusting to the shift?
You know, it's always challenging to get the timing right. I mean, who didn't expect to see companies ranging from Netflix and Amazon to Peloton, Walmart, Target, etc. And we could throw in, you know, when will Home Depot and Lowe's suffer the same effect? It's easy to look at it in hindsight and say, well, of course we should have seen the demand fall would affect these companies once we began to reopen. And once we began to reopen, the reality is a lot of these companies began to fall in anticipation of that. I can't tell you when Home Depot and Lowe's are going to peak, but I would guess it's going to be before.
There you go. There's the break, the push down. Going to break down. So using a sell from the off, you held it, you'd win as well.
I think the market sniffed this out in advance in a lot of companies. It just didn't get it perfectly.
Barry, perhaps we're not going to head into a recession, and we're not in a recession now, as everyone agrees, almost everyone, I should say.
RSI nicely red.
There are some
Fantastic.
outliers.
Oh,
Are we going to see an
really
earnings
good.
recession, though,
The end is wage, like I say.
the inability
Make a
for some
move.
companies to get ahead of the shift in buying preferences?
You see the two indicators giving us indecision, buy or sell. So there's going to be a break.
Was a fantastic period for earnings growth, and while a lot of people blame or credit low rates by the Fed for causing this spike in revenues and profits, you know, you have to give a lot of companies credit for really hitting their stride post-financial crisis. Yeah, low rates are a factor, but it's only one of many factors. And then to see how everybody pivoted during the pandemic, you know, a lot of companies did a lot of things right when we were in an uptrend. Now it becomes a whole lot more challenging.
Barry, thanks so much. Barry Redholz for the update today. Masters in Business, just a terrific
30 minutes to go.
For Bloomberg Opinion. Lisa, VIX out of stick, S&P futures in -40. Lisa, I just looked at yen, which has, of course, been my focus today. The yen weakness, going back to the depths of the 2008 crisis, is a depreciation of 40%. It has just broken through to new lows not seen, new weakness not seen since 2015. This is a backstory.
If you took the sell,
front and center,
him out,
how much can
here,
continue to diverge
sell again, you should
world that is moving to
Unline.
a decidedly positive nominal rate structure.
Oh, so
They are still
down there a little
negative
bit,
for both
but
real and
back,
nominal
so
levels, and they are committed to it for the time
bounce
being because inflation isn't picking up
the
way
through
that it
or
is. I want to point to this, talking of dollar strength. The trade balance. This is interesting.
There we go, trade
saw
balance.
an unprecedented reduction in the trade deficit in the United States in April, in that data that came out at 8:30. The reason being, imports from China were down dramatically because of the closures, because of some of the restrictions on the ground. This just shows how quickly moving this economy really is.
And if China opens, how does that adjust the trade deficit?
Exactly.
I mean, the 87 billion statistic now is still highly unusual off of the shock of what we saw the last go-around.
Deeply negative. And so how much does that continue to persist and deepen once it opens?
It's required, folks, that we end Bloomberg surveillance with the phrase deeply negative, because we are a deeply negative show. Thank you, Professor Blanchflower, for watching. We'll be all Cardiff with Blanchflower here in a bit as well. Stay with us through the day. It is the most interesting
anything,
of course
a
of
little
focus on
come away
Target,
from
on
back
radio,
swing.
on TV.
Switch to
This
gold.
is Bloomberg.
Open. Gold's going to do buy. Decide to come back. We'll take some. See what's going to happen. Where this is great. It's exciting. It's what trading's all about. Waiting, watching, not doing anything. Took a nice win. Say we're getting on for 20% up. So, you know, hang fire. Wait for the next move. It could be the open. We've got 3 minutes though till the 2 p.m. I call it move, which is something always happens 30 minutes exactly before New York Open. Let's see if we get a move. It looks like it's going to push down, but you don't know. Break.
at the Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft.
26 to go. Handle. All sat on that line.
SpiceJet Chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. There's a big celebration happening at the Gwalior airport. As you can see, they've
Been on a sell.
rolled down the red carpet.
Taking profit now.
SpiceJet Chairman Ajay Singh. There are balloons. There
10 pips.
are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
BSO Now is your online home for weekly Boston Symphony Orchestra.
Yeah, beautiful. There's the move. Yeah, you know, deciding indecision candles on the buy. Didn't try to break, couldn't. That's moving down. Look, perfect, perfect sell. So. Well done for everyone for waiting for that move. That's another nice win. Through scalping, just sitting, waiting for the move, jumping in, getting the green. Out.
You've seen this movie before, haven't you? It's Target, the sequel. Equity futures negative. The countdown to the open starts right now.
That was the move. Look at that. It's exactly 2 p.m. here, 9 a.m. New York. What happened? Made the move. Crazy. Always decides 30 minutes before to do the move. Pretty much. Then it's following, as we said, going the balance of trade was better as expected because, like they said, of China being locked down and no imports from China. That's what's made now.
There's so many pressures on margins. Businesses feeling the pressure of lower margins.
The market needs to price in a change in the profits outlook.
Who's able to hold on to margins?
Support, so we'll see if we bounce.
Earnings calls. They're very cautious.
It's a long
Can see where
list of companies that are freezing hiring and or cutting staff.
You're seeing all these CEOs, their confidence is waning.
You're going to see some downward revisions.
I mean, you saw the targets of the world. I mean, you know, the stock was absolutely crushed.
They can't push this inflation in their base prices onto consumers.
Those tail risks are still really elevated.
There's a long list of risks surrounding this market.
You have to look at those and think that the sharks are circling a little bit.
Support, no.
Kelly Lyons, I'm pretty sure I watched this movie play out 3 weeks ago.
Yeah, this is happening in rapid succession, John. A really negative surprise for Target just 3 weeks ago, followed by the second cut to its profit outlook.
Target stores in
Stock
trouble.
already down 31% year to date, is lower by another 7% in pre-market trading this morning, as it now says that its operating margins for the second quarter will be around 2%. That is down from the previous guidance of a range around 5.3%. Now, I will say they do think this gets better in the second half. Somehow they expect operating margin will rise to about 6% in that later period, but clearly investors have some doubts about that this morning. The problem for Target, John, is that demand is shifting rapidly in the face of inflation towards things like staples and away from discretionary categories. And the company finds itself with way too much inventory for items that consumers no longer want. Now, how does it solve that? It says it's going to try to cancel orders, cut down on those, and mark down more for excess merchandise. So basically, discounting is coming. Things are going on sale, John, and obviously that means less profit. Target also says it plans to take other actions like adding storage near ports and adjusting prices to offset high transportation and fuel costs. But as we've seen from some retailers, the ability to exercise that pricing power and pass those costs on, getting more difficult as a consumer becomes less tolerant of higher prices. And of course, Target isn't the only retailer grappling with inventory issues either. We've seen buildups really across the board to the tune of 30 to 40% for the likes of Walmart, Home Depot, TJ Maxx, you name it. And of course, it raises a question as to whether some of these players too will also have to start discounting in order to get those inventory levels down. Although one analyst, John Zalidis, president of Quo Vadis Capital, saying this morning that this seems to be an internal Target issue, that this is a company that has just grossly mismanaged its inventory, John.
Kelly, that's the number one issue for a lot of people. Is there a broader macro signal here? Or is this just about a single name? And Kelly, you mentioned one word twice, discounts, markdowns. This is not going to be an inflationary story. This isn't about passing on higher costs because of higher costs. This is different.
It is different. You're trying to get the consumer to buy these discretionary items that Target now has a lot of, that as a consumer faces higher prices for groceries, gas. Maybe they're less willing to go out and buy that television, John. And for Target, a discount retailer that caters to the lower end, it might mean having to meet them where they are.
The stock is down 7%. Kelly, thank you. Joining us now is Nuveen's Tony Rodriguez, Zach Griffiths of Wells Fargo. Zach, first to you, how difficult is it to take a macro signal from this name here, from Target, and from other retailers in America too?
It's tough because it's a story that we heard once and we're hearing again, as you outlined at the start here, John. And to us, perhaps these markdowns become a bigger part of the story from an inflation perspective, from a more macro perspective over the next couple of months, but we're really not seeing it right now. And when we think about what we expect for inflation on Friday, which is certainly key for the monetary policy outlook, we expect inflation to show that it is not coming down slowly. So it's kind of tough to square the message from Target with what we're seeing and expecting from the macroeconomic data, but it's definitely something we'll be keeping an eye on going forward.
Tony, when you look at this, is this a change in the strength of the consumer or just a change in the spend, a change in the basket and what goes into it?
Well, good morning, Jonathan. Good to be with you. And I think it's actually a combination of both. I think the bigger portion is the change in spend, as we are now kind of much more reopening is occurring and people are shifting from goods to more experiences, services. I think that's the biggest read-through. But I think part of it is also just a lower amount of spending given the higher prices that we're seeing across the board, but especially in areas that really hit the pocketbook quite a bit, whether it's in, energy prices, food prices, et cetera. But I think you saw that, for example, also in housing. You've seen some decline in housing activities as a result of, higher rates, Fed activity, et cetera. So I think it's a little bit of both that is the read-through for the broader economy.
Tony, this is the composition conversation. Let's have the conversation about speed. It's only 3 weeks ago they did the same thing. It seems to me that a lot of corporations, and not just retailers, across industries, Tony, are really, really struggling to get a read on demand in this economy. Where it is.
Still moving down, further down, 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 down.
Well, I think it's partly what the Fed is hoping to achieve here.
Plastic is green, so you need to wait for that to go red. I do sell. Trend buy is also grey, not red. So you want everything to sync up if you're thinking about a re-entry after taking the sell from. If it's not all synced, don't do it. Chance it can back on you, burst on you. Better to be safe than sorry. The whole thing about the axe is having confirmations lined up.
So I think that the bottom line is we expect a slowing in the economy as we move through the year. This is one example of how you start to see that play through in companies, retail here being the example.
Zach, you've got a different view on this. You think inflation can persist and yields can go higher. Walk us through it.
Yeah, Jonathan, everything that we're seeing, at least in the macroeconomic data, suggests that inflation is very broad-based and you are getting additional difficulty from the energy side of things, which will be more of a near-term story.
Just all the levels.
It just shows that
Forex trading system look like here. We'll just show you what you
and
get.
when we think about where the market
Group.
is from a terminal rate perspective, it looks to be around 3.25 in June of next year, give or
Lots of
take. We think
systems
that's way too
setting
low.
can
Something
do.
like 3.75 to 4% is what the Fed is going to need to do to really bring down this inflation that we expect to be very persistent. And so we expect the market to converge on this view over the next 2 or 3 months as we see these inflation prints really get stuck
Extra
around
points of
8% from a headline perspective. And that's just not a
oh,
situation that
see
we
that
think
that's
lends
scalped
itself
in
to
the
the
trend
Fed
line down to
slowing down,
there, and that's away in a
stopping and
range
looking
of
around. None of that. We think they have to keep
synced.
going 50 basis points at least through September.
So
And that's going to flatten the curve and raise rates across the curve, but driven more by the front end for
wait
Zach,
and
you
watch.
said two big things there. We get stuck at 8%. The Fed's got more work to do. Fed funds gets closer to 4 and away from 3. Run me through the Treasury market. You talked me through the shape of the curve. I want to talk about levels. Where are we going through the front end out to the long end?
So we think the two-year yield
About 20 minutes to go to
350
open.
by the
Our
end of
coffee.
this year, and when we think about the back end of the curve, we see
Say we're well up for the week and the day, so it's been good small account challenge so far.
Let's call it 325 on the 10-year. If you want a midpoint, I'd say the ranges around those midpoints are pretty wide, as there is still a lot of uncertainty in the outlook, but that's how we see things unfolding if our call for inflation to remain persistently around this 8% number is correct.
Tony, what's the counterpoint to that? Getting stuck at 8.
Yeah, so our view is that, we're not that far off on a 10-year forecast where we think kind of a 275 to 3.25 is a range for the end of the year. We'd put a point estimate at 3%, but we don't think the front end gets quite that high because we do think the Fed will be able to back off. Some of the things that we're seeing with respect to inflation, which is the one factor model that the Fed is using right now, is that we are seeing, for example, some improvement in the ISM when you look at some of the supplier deliveries and backlogs, for example. And one of the key things is average hourly earnings. And you saw that come in at 0.3% last month. But if you look at a 4-month annualized, back in January, that was 6.3%. And we look at it today, that's down to 3.8%. So we're already seeing some softening in the wage pressures. And again, it's way too early to call it mission accomplished. But we do think that as we move closer to the fall, the Fed may be able to back off from these 50 basis point hikes to a 25 basis point hike cycle. And that will prevent the 2-year from, we think, reaching that 3.5% or higher level.
Tony, that's the hope. A lot of people share that hope. I hope you're right. I hope that we can get to that soft landing and the economy is going to be okay. When it comes to risk assets, I don't have a view. I'm going to ask this of you, though, Zach. Can you make the case for risk assets if we haven't seen the high in yield to the Treasury market?
It's certainly a difficult backdrop for risk assets.
As you can see, it's running out of steam. Candles are getting weaker. We're going to get a reversal open.
The increase in yields will be, it'll be on the real yield side of things as the Fed tightens policy more aggressively and the market starts to price in a more aggressive Fed. So that is a difficult backdrop for risk assets in our view, as it signals a tightening of financial conditions. I think that the U.S. consumer and the manufacturing sector has shown some bright spots more recently, and it's tough to juggle these different data points, whether it be from a micro perspective from earnings or these more macroeconomic data factors. But to us, we think that the consumer can hang in there. And when we think
going
about
against what everyone's saying,
it's going to remain at
could smash all the way down, hit heavy support, then bounce up for a buy, range a little bit around here, boost.
For risk assets over the next 6 months, let's say.
Zach and Tony,
we will see.
The Treasury market looks like this. 20 minutes out from the open and bound futures down about 1% on the S&P, on the Nasdaq 100 down by 1.3. Abby, it's all about one name, isn't it? It's been about Target for the last few hours.
It is certainly all about Target. Shares down sharply, and it really feels like Groundhog's Day, to the point that you and Kelly were making earlier from just 3 weeks ago, because this is the second time that they have slashed profits and operating margins
down.
for the second quarter.
No buy yet. Like I say, it's going to hit that heavy support.
For the second quarter.
Again, stochastic is still green.
6% for the second quarter.
Trend bar is still grey.
And the stock now
risk anything. Too close to the open now. Better to wait.
Really very brutal.
Although we've got an extension. Excellent. Want to see RSI creeping into that over sold zone. Cash trade.
Talked about a little bit of bloated inventory relative to pandemic attire. They were caught off guard by the desire for going out type clothing. That stock down 2.4%. Walmart, of course, a couple weeks ago, very similar situation to Target, where their last quarter was pretty good, but the outlook relative to operating margins not great because of rising inventories. Best Buy down 4%. But John, there is one bright spot, and of course, Kohl's also reported a brutal inventory, but that stock up 8%. This on the news that they are in exclusive talks with Franchise Group over an $8 billion bid. They have 3 weeks to work at the
low, but it's there. Down
about 20% after its disastrous quarter bottom. It seems as though investors, traders,
into the group.
Maybe it happens.
Abby, thank you. This Target story is really complex, really difficult to get your head around because things have changed so much in just 3 weeks. It's the second profit cut, profit outlook cut. For anyone looking at this particular name right now, are we writing down the current quarter? For them we are. Or are we writing down the whole year because we don't have confidence in their guidance for the second half? as they forecast an improvement as this year continues. For now, at least, targets down 7.5% following a big drop in the last month. Coming up,
drop.
The primaries putting the spotlight on the midterms.
And now we breakout zone.
Gas prices, including food
Get a bear
prices,
signal, sending it down.
hurting families,
Board.
especially as they sit around their kitchen table. But we're going to continue to do everything
Lit.
that we can.
The White House continues the fight against surging prices. That conversation up next.
So now we've got stochastic red, sell, so I'm waiting for the open now, get a bounce back off support zone, pockets.
Everyone you meet in Port Harcourt has stories about what they call black soot, caused by the manufacturing and consumption of these fuel products in the illegal.
So a quick look at gold.
Oil theft, known as bunkering.
Gold also pushing down, hitting that beautiful.
From decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes have to give way to oil wells. No one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot.
Straight to our neutral port. Trend line's disappeared. There you go. Just as I say it does it. It moves the trend line. Broken that, and now we're heading down. Now we're on a new daily pivot, basically gold, which is two. Watch out for that. Then you want to wait for gold to break this zone. You sell, sells, or you buy for the RSI is pointing down. If it's 25, then it's a sell.
Stocked early enough all these precious materials you were just mentioning, and we were on the
30 just a little bit. Zone of support, as you'd expect. It was good how it came along. The news result formed a wedge. Can break either way, decide to break down. Now it's going to push up for the open. We'll see in about 10 minutes time.
Understand that prices, these gas prices, including food prices in particular, this is hurting families, especially as they sit around their kitchen table. But we're going to continue to do everything that we can. The rescue plan has really been able to help us put us in an economic place where we're stronger.
Paying at the pump, we have a new number, $4.90. The average gas price in America getting closer to $5 a gallon. Drivers in California, they're looking at a 6 handle. This building the pressure, keeping the pressure on President Biden with the primaries kicking off in 7 states. With us now, Emily Wilkins.
Re-entry, beautiful.
How big is this story?
Re-entry on the sell.
Price pressure, food, energy, and all the rest.
John, this is the story of the November midterm elections right now.
Down again.
The primaries that we see today, we're going to learn a little bit more about the direction that individual parties are going within the primaries. The overall story for November is very much inflation. And you see that in how the White House talks about it. You see it in how Democrats talk about it. And you sort of see that they do try to change the narrative a little bit. They try to not talk about inflation, but talk about unemployment. Not talk about inflation, but talk about lowering prices. And the reality is that there's really
His mind of what to do. Spread.
Democrats can do to get these prices
Zone
down. It's very much impacting Americans, and it's giving Republicans a lot of confidence in a midterms year where they were already expected to come out ahead. This is just the wind at their backs at this point.
Mike, this conversation at a time when we're actually looking at Target selling down inventory, marking things down. Put those two things together for us, Mike. You've got this big inventory build-up for some of the retailers. They're going to have to aggressively sell some of these goods now at a discount. Then at the same time, you've got energy prices pushing ever higher, day after day, week after week, month after month.
We've got CPI coming up.
Hey, we've got a PR plus signal. Beautiful. What to say.
Things are bringing down core inflation. We're expecting it now to have a 5 handle come
Nice.
down from 6 and that would be the Fed's target, what they're trying to get to. But the bad news for Joe Biden is Mr. and Mrs. America don't really care. What they're caring about right now is food and gasoline.
Our new indicators.
Can't do
Then
anything about that. You got to talk to the weatherman, and you got to talk to Vladimir Putin about bringing down food. And look at what's happening with gasoline.
reversal to the sides, what it means.
April, as gasoline prices flattened out. What's happened since then? You can see the yellow line. It's going to be bad on Friday. Headline is going to be bad news for the White House. Now, the reasoning behind this and where Joe Biden gets treated a little unfairly is that we don't have the gasoline refining capacity. They can get all the oil they want from Saudi Arabia or from the Strategic Petroleum Reserve. But right now, our gasoline refining capacity has dropped significantly. A lot of plants mothballed during the COVID crisis because everybody thought we'd be switching to renewables. And that means
Listeners say 10 minutes away from the open.
Demand, there is less supply. Demand's still strong. Prices keep rising.
Mike McKee, Emily, thank you to you both. It's painful and it could get worse. Goldman Sachs yesterday evening putting out this research note. Jeff Curry and the team with these numbers. Just listen to these numbers. 140 over 3 months for Brent. That's their 3-month price target. For WTI, 137. And even if you go out 12 months,
gold later on.
130 on
PI.
They're looking at 125.
Good.
On WTI.
Close a session. Good trade as well. We always take that one.
Tony, are you modeling those kind of numbers? 140 over the next 3 months, 137 on WTI.
Move.
Well, we don't think that that's going to be an equilibrium level for oil prices, but we certainly think there's some ability for oil prices to hit that level over the next couple of months, given all of the volatility and uncertainty in the energy markets right now. As a longer term measure, no, we're thinking that we're going to be in this kind of triple digit, but low triple digits, call it 100 to 120 for the average for the balance of the year. But then next year moving into a lower level than that, maybe getting back to below 100. So not modeling the 140, 150 for any extended period of time.
Zach, does that smell like demand destruction to you?
Yeah, that's going to be a big issue, I'd say, and we don't have that priced into our outlook for inflation. We think that oil generally comes down gradually from the levels that we're at today, so that's definitely at odds with us. And to me, it bodes the question, would the Fed look through that and its impact on the broader inflation measures, the headline inflation measures, I should say? Perhaps they do, but to me, it kind of just spells more issues, not only for the Fed, but for the U.S. economy if that were to come to pass.
Zach, how would you characterize the current relationship between what happens in the commodity market and what's happening with treasuries?
It's certainly an interesting dynamic to keep an eye on. And when we think about sort of what's been going on with how yields have risen, you've seen a lot more of a pickup in real yields recently. And if we do see these oil prices start to come up, we could see break evens start to rise again, maybe even back towards the highs of what we saw earlier this year. So that's definitely a dynamic we're going to keep an eye on. The Fed does not want to see break evens come back up. They've already bounced a fair bit, at least on the 10-year break even. The Fed would much rather see that come down and see that inflation expectations are starting to respond to their policy actions. So if you have that water muddied by a big increase, even from where we are today in energy prices, that's just going to be more of a headache for the Fed.
140, 137 on Brent on WTI. These are big forecasts. Brent crude right now 119, WTI 118. Tony, when you think about where you want to be in credit and where you don't want to be in credit, how much does the energy story influence that?
Certainly from a sector composition of your credit exposure, it influences. We have been relatively positive on the energy space, materials this year. So having overweights to that makes sense in the context of these energy prices. If you start modeling in 150, then I think both the demand destruction that might come from that and the Fed policy response, which would mean a certainly higher ultimate level of the Fed funds rate and the aggregate demand destruction that would bring along, I think that has to temper your view on where to position from an overall credit perspective.
Zach, it's almost like a double tightening, isn't it? Crude goes higher, it hurts the consumer. Crude goes higher, and this Fed has to go higher too. At some point, does this Federal Reserve have to start responding to what happens with the output numbers, even if inflation persists? Zach, let's talk about your world and finish there. You think that this
to break that level,
we get stuck there. But what happens if the economy starts rolling over with that 8 number still sticky? What does this Fed do, Zach? Do you understand the reaction function of this Fed? if that's the scenario they face?
Everything they've indicated up to this point is inflation is the #1 priority, and I just don't think they're in a position to respond to growth concerns proactively or even that quickly reactively if we do get these inflation numbers like we're looking for. So the Fed's in a very tough spot, but at the end of the day, if they aren't really seeing any material progress with inflation moving downward, I think that is what they're going to remain focused on, and perhaps it means a recession is necessary to bring this inflation down. That's not an outcome that anyone wants, but I think the Fed is probably at this point willing to risk that in order to get the inflation situation under control, as opposed to responding more proactively to a slowdown in growth or perhaps even a big hit to risk assets. So it's a tough spot, but we do think inflation is #1. The Fed keeps tightening, and it's a difficult backdrop for the U.S. economy and certainly for assets.
That's the scenario that Deutsche Bank are forecasting, a messy one, a recession ultimately by year-end next year. Zach, wonderful to catch up, buddy. Zach Griffiths, Tony Rodriguez breaking down the bond market for you, and the equity market too, as we get some numbers from Target once again, a familiar story. Futures down by 1% on the S&P, on the Nasdaq down by 1.29. Coming up the morning calls and later, Wall Street divided.
Start of a nice little push up, little price reversal. Again, it's worked, you see, if you went in on that buy. Then already you'd be nearly 10 pips with a spread, about 8 pips up. Get ready for the open. Look, everybody. And let's see. See what we can bag. 5 minutes left.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way.
Round just waiting.
To learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Minutes away from the opening bow this morning. A good morning to you. Target is lower by almost 8%. Equity futures down 2. We're off by 1% on the S&P, down by 1.25% on the Nasdaq 100. That's the price action. Here are your morning calls. First up, Evercore.
Pushing back down again.
To outperform, highlighting the stock's compelling valuation.
We're waiting.
Earnings growth.
Stochastics green, RSI pushing down, so a bit of an indecision. We're sat on support, so is it going to be a fly up or who knows? 2 minutes to go, everybody. Good luck. Remember, wait for confirmation. Going in on our smaller account, of course. See what we can get.
Coming up, BlackRock's Kay Moore says to remain defensive with growth stocks starting to look just a little bit more attractive. That conversation up next with futures down 1%. This is Bloomberg.
Oh, we've got a nice little breakout indicator as well. Another one. This one was right, remember? This one disappears, moved down slowly, slowly, slowly. So, yeah, according to our system, we're looking for a reversal.
Energy prices and a short supply of key chemicals that produce synthetic fertilizers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives.
To go, the countdown, 50 seconds to go. Good luck, everybody. Good luck. Let's see if we're going to get up to our breakout zone here. Look, green dotted breakout zone. If there is a buy, sell, we're going to drop and break down by heavy support. So let's see. Final chart, we've got 30 seconds left.
The recent price spike could mean more farmers going organic for the long term.
20 seconds.
Lots happening on Wall Street.
It's the basic law of economics.
It validated what the market.
543. Right, here we go. Let's see.
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Beautiful, beautiful, beautiful.
The biggest names in business.
Pushing up.
That is a great question.
If it breaks the trend line.
Great question.
Great question.
Great question.
That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great questions. However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia.
This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
If in doubt, blame Target. You did that 3 weeks ago. You can do it again this morning to a certain degree. Equity futures are down
Blame
by
Target,
1% on the S&P, on the Nasdaq 100 down at more than 1 full percentage point. Target is going to be a whole lot lower at the opening bell, maybe just not as low as it was 3 weeks ago. Another cut to the profit outlook. Switch at the board, there's your opening bell in the bond market. We look a little something like this. Yields lower by 3 or 4 basis points.
Nice buy cup.
Holding on to 3% on a 10-year.
See if we get a continuation. Just watch RSI. You know, you can wait for it to come out the neutral zone. So I mean, there's no panic about open. That people seem to think. Wait, if you've got a system like ours, red's a sell, if it's green it's a buy. I mean, it's not hard. Just combine it with price action. I just took a sneaky little buy there, but I'm just waiting now. Next move, we're in between the trend lines. The price right at the top.
Morning, John. Well, speaking of cutting, the World Bank cutting its global growth forecast. This would be a man bites dog or dog bites man headline.
Watch your time.
We anticipated 2.9% is their forecast now for global growth. There's no accepted definition of what a global recession is, but as they say, that's close enough for government work, 2.9%. And they give us a stark warning that stagflation is on its way, low growth and high inflation will be around for a couple of years. Talk more about all the details in just a few moments, John, but a gloomy outlook from the World Bank.
Hey, Mike, looking forward to it because we'll catch up with David Malpass, the World Bank president, in around about 10 or 15 minutes' time. Mike McKee, thank you. One stock to look at, it's Target. We're down about 7.4% in early trading. Let's get to Abby for more. Morning, Abby.
Good morning, John. Yes, we have Target plunging down more than 7%. Right now, the stock at its lowest level since September of 2020.
Down now, still in the neutral zone, so
profit outlook and its operating margins for the second quarter. Once again, the second time in
bounce,
3 weeks.
push, beautiful, beautiful. Go on.
Down about 7%, weighing on the other retailers. Walmart, Macy's, and Wayfair all down sharply too, as it's a fear that it could be not just a target problem, that inventories
Beautiful. Yes, there we go. See, there we go. I hope you all won on that. That was a nice, easy win. Thank you. And look at that. Beautiful, beautiful. Post that to the group. So, nice, easy win. This is the whole thing about waiting. It was worth waiting those minutes. You knew there was something happening. It was building up like a volcano waiting to erupt. And that's when I looked at that straight to our breakout zone, as I said. That's perfect. Nice to get 10, 20, 30, 40, $50. $50. That's brilliant. $50. Remember, we're trading a small account. So, really good return on the investment there.
The question is, when will investors want to buy? That'll come down to the
Perfect. Right, let's see if there's another move. Let's see. Jumping in, is there anything else we can do?
We did this 3 weeks ago.
Pull back.
Doing it again this morning. Gabby, thank you. About 2 or 3 minutes into the session, this is what we look like.
The RSI 73 is going to be higher. Wait.
Information technology together with consumer discretionary underperforming. IT down about 1.2%.
Next move.
Some of these big tech names facing a familiar problem. Higher yields, and that's the story of the last week.
Indeed. So today, of course, that story reverses. We're back below 3% on the 10-year, but you're totally right in terms of the long-term trend has been the path to yields higher. Ian Leon over at BMO Capital Markets yesterday saying that look for more cheapening, especially when we're getting some supply this week as well, particularly on the long end. So with yields higher and some of the cheapening and bond price lower, that certainly means more volatility within the tech space. That's what you're seeing there, Don. It was pretty incredible. We've gotten used to a lot of this volatility, but you've done now almost 3% swings from the peak yesterday. Big gains higher.
Got some more on the sell there. We just jumped in. One loss.
And the futures and sort of that intraday price action. If there is
480, but we won 680, 880, and 720. That was purely an execution error on my part there on the sell. Sometimes happens, but this is the whole idea of true scalping. Let's see if we can go again, and we're going to get a rejection off that zone at the top.
4,100 or so. When you think about really sort of the forward PE ratios of all of these companies, John, as you mentioned, though, when we think about fraud and pulling out of this market, $3 trillion year to date has been wiped out so far this year.
Yes, we did. Hey, we're in again. Beautiful. Rejection. Sold again. We got 640, 480, 8 and 120. So another $40 there. This is what true scalping's about. Loading them all up. Now we'll wait. You need to jump in. We want to see again. If it goes to the top, it's going to peak down. If RSI goes 75, it's a buy. Look at the VWAP. It's touching the VWAP. Expect that VWAP. So wait. Here's the next candle coming.
But still, the spread widening right between $54.20 offer price and the current
Doing
share price.
candle.
Interesting reporting on the Bloomberg terminal from Kurt Wagner. There's no such thing as buyer's remorse. We always say on this program, we don't know what's inside the head of Elon Musk, but we do know what Twitter's board thinks. They've said in the last 24 hours.
Oh, we're in again. Beautiful. Another sell, rejection. And we got another 10, 20, 30, $40 again. And that is me done. I mean, that we've smashed our target. Absolutely. This is how you trade open. There's all I'm positioned to show them all to the group. We took a total of, and you can keep going. I mean, this is it. You just got to know when to stop. But we took a total of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16 trades and just one loss. All on the NY Open. Hey, what can you say? True scalping. This is what it's all about.
Or the start of a new bull phase.
Posting up.
Strategists continuing to weigh in on the debate with Strategas running the following. One of the more difficult
well
things
happy
in
with
this
that.
business is differentiating between a bounce in a downward trend versus the
NY Open done.
more durable. Our best guess remains the rally is more the former than the latter.
This is the good thing about Axe. It tells you where to get in. You can see the areas of support and resistance.
Momentum as his reason why. He says typically when you see a significant market bottom, there's a lot more
And
stocks
again, just posting the books there. There's all trades for today. And remember, we started with a small account, 700. So brilliant.
As of this moment, only about of stocks in the S&P
hit our
are actually
TP.
trading above that technical level. So he says that raises doubts about whether this uptrend can actually last.
And that's it. We'll be back for the oil news later on. As simple as. I mean, trading is not easy. It's not for everybody. But if you can have anything like this to help you gauge. I mean, why did I buy? I bought because we're waiting for the break. We took the break. We saw the RSI. We saw the level. We even got a bull signal. Why did I take the sell? Because it supported the VWAP, our points of interest line. I know there's going to be a dip. Yes, this is probably going to break. Look at it now. Every time it hits that top, we'll see a break. Look at RSI. That lovely peak. When you get that dip down peak, it's time to sell. If it curls up, it's time to buy. And that's it. And it's just in and out. And I've got my levels preset between 80 and 100 points. And that's it. Multiple trades, in and out. We're done trading in 8 minutes of the open.
Big time. Well illustrated. Kelly Lines, thank you.
So we've managed to hit our daily TP. And that's increasing our account now. Beautiful. So, well happy with that. We're on our way to doubling our account again. You know, Friday, another small account challenge done. Just to show, you know, with $500-600, that's what you should be. Yeah, I'm going to agree with Strategas, actually, John. Through scalping system, that's ideal. I'm just showing you what I can. Might do another. I might do a $100 one next week and see. I'm using the smallest lot sizes. I'm only using one. Obviously, with $100, you can't trade US-30. That's the problem. You can trade gold. Don't like trading gold with a small account. You've got commissions. You've got spreads. Commissions either way. And it's extremely volatile apart from major. But people like to trade it because you can trade it. That's the risk you take. You're better off saving your money into an account until you can trade the indices, DAX, US-30, whatever, because they're a little bit more reliable than gold. Like I say, you don't have to pay on IC markets. You don't pay commission. It's the spread. Spreads aren't crazy. Now we've got a breakout signal to the downside. Look, now do you take a sell? No, you wait. Price to break. Trend line. Not just in Target, but across the entire bounce up. Competitive group there. I agree that everyone's extrapolating Target's experience to their peer group and then perhaps to the entire retail industry. You know, the silver lining of this, and I know this has been discussed a little this morning, might be that goods prices actually see some disinflationary pressure. You see, reverses off it. Would be on balance pretty good for the consumer. But as we've talked about a lot, you know, we're seeing this rotation from goods consumption to experience and services spending. I think that is a very durable trend through the entire rest of 2022. And so maybe that's a little where I'm focused on the pricing side. I'm not worried about the health of the U.S. consumer. I think this rotation is clear and makes sense coming out of the pandemic. But we do want to be conscious of where the opportunities are from an earnings perspective. And if those retailers have bloated inventories and we're seeing this rotation in terms of spending, then I think we need to be thoughtful about where we're putting our money to work. Okay, energy, another story for you as well. Look, as you can see, favorable, durable trend you expect to persist because of what you say the supply-demand backdrop is going to support natural resources. The numbers out at Goldman, Kate, are unreal. 140, a 3-month price target on Brent. WTI at 137, and even 12 months out, they're looking at 130. Not going to be right. Respectively. Do I want to play that still through the energy names, even after they've ripped as much as they have, Kate, this year? Yeah, look, we firmly believe there's still upside in energy and resources. Of course, it's going to be volatile. Of course, we're going to see some bounces. And of course, the bear debate here is whether or not slower global growth will take some of the demand. Yeah, beautiful. Nice sell. You could have taken that. Again, you should have entered when the price was at the top and touching the arrow and then trade the gap. So even if it bounces off this support line, you're still bagged. It's all about the entry. Don't enter at the bottom, touching the points of interest or support and resistance. Enter away from it. As long as you've got the confidence it's going to go down, you'll get in and out of the trade before it even hits this level. That's what's happened.
Sort of
Perfect.
industrial metals and miners, as well as on the energy side, really supports elevated prices for the medium term. And many of these companies are trading at really discount valuations to the rest of the market. And I think we can still get significant upside from here.
Okay, the last one in your three themes.
Back into neutral zone now, so now don't trade, wait,
Digital spending,
RSI to break,
now, typically
bounce.
when people hear that, they'll be thinking some
Gold.
of these tech names that did well in the pandemic and they're really struggling
Gold,
now. What do you mean by this? Can we get some more detail?
first, and then also on the open was also a nice buy.
Yeah, when I talk to people about
See,
technology,
and again, where would you get out? Points of interest, all the blue
over the medium
distance.
term, you know, sometimes people say, well, what about these big mega caps that really outperformed the market over the course of the pandemic? Isn't their story over? And I say there's a lot more to technology enablement, and to this digital.
It's great because we could see, and we sort of like predicted as much as you can that US-30 was going to reverse. Nothing is ever guaranteed, we know that. But the way the US-30, the Dow was set up there at the bottom here, saw the little sell-off due to the balance of trade. It was better than expected, the good news. Remember, you got the good news, so you likes to trade the way of the news once the market opens a lot of the times. But we could see how the price action, we got our little reversal, we got our little trend line break indicator. We had an X at the bottom here, look, which is power move indicator. We had 1, 2, 3, and then the RSI going green and stochastic. You have to take them. You can't take them trades all in confirmations. Trading's not for you. It's as simple as. And, you know, it's up to you what level you want to get out of the trade. Everyone knows in the group how I trade. Don't, you know, there's enough things on here to tell you where to get out of the trade. That's the only thing I don't kind of tell people. That's up to you. It's not financial advice. So, but in terms of an entry, if you're using this system, you have to take that trade. That move was great. It was just waiting, ranging. It could have been down. Would have sold. Instead, it was a beautiful push to the upside. After we took the sells on the news, and we great day's trading. Well, that say we're starting our account. You know, getting it back up to nearly double as well from the 600 start on. See how we progress tonight. We'll do a little bit of oil. Oil you can trade with, let's say the medium account, but 600, 700, 800. You can trade oil with that. Just look for 10 pips every day and make sure you've got something like a catalyst momentum. Push it. It has to be the API or the main use, or you know, or whatever, you know. And that's what moves oil in a certain direction enough to get you money. Outside of that, it can be just like gold, blow you out either which. Don't enter a trade unless there's something behind it, give it substance to trade. That's why I always kind of advise.
Front row, exclusive interviews with the most influential figures in finance.
US-30 look again, it's now waiting to bounce again. That little sell, and as I said, you do want to take a sell until broke the level, ranging around. But every time it hits the top here, price action, you should be selling. Sell, 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 sell. Then when it hits the neutral support, leave it. And buy, risk the buy if you want. While this signal is in play, we're below the VWAP. You know, stochastic is, and we're with a power move. We're at a power move signal, look. X. So is this going to push down or up? Let's see. The RSI is green. Oh, we're going to take a range, but that's a good. I'm just really pleased with the small account challenge that trades were away.
Between vaccines and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron? Because as we know, many parts of the world use different types of vaccines, and that would be a great data to look at. It will be also great to look at, because majority of the studies done, uses a small sample number, and most of the time, when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that The virus Omicron variant still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2, none of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
Economic dislocations, whether it's a recession or a depression, leave lasting scars. They leave lasting scars on balance sheets. They leave lasting scars on people. When you talk about the consumer, you got to ask who's got the wherewithal to withstand a slow patch in the economy.
The World Bank has a warning. Here it is. Here's the quote from their latest report. The world economy is again in danger, facing high inflation and slow growth at the same time. Even if a global recession is averted, the pain of stagflation could persist for several years. Mike McKee joins us right now. Hey, Mike.
Good morning, John. Well, it is stagflation in the forecast from the World Bank. That is low growth, high inflation, and they say it could last for years. They predict that global growth will just reach 2.9% this year, which, if you ask any international economist, comes very close to the idea of a global recession. Now, take a look at what's happening in individual countries. Almost all of the developed nations have seen their growth forecasts cut in half by the World Bank. The U.S. goes down to 2.5% from 5.7% coming into the year. China, 4.3%. Interesting question for David Malpass. With COVID still hanging around there, can they even make 4.3%?
Yeah.
Euro area cut in half. And here's the sad part. We've talked a lot about the destruction that Vladimir Putin has brought to the world economy, not just his own. And we've talked a lot about Russia, down 8.9% this year. The Ukrainian economy now forecast to contract 45% because of Russia's invasion.
Mike McKee, that is utterly depressing. Mike, thank you. Let's speak to the man himself, David Malpass, the president of the World Bank. David, fantastic to catch up with you, sir. Let's start with this. Mike touched on it. How would you define a global economic recession, and is this it?
Hi, Jonathan and Mike. This is many countries will have a hard time avoiding a recession. We're not in; it's not a global recession yet. It could. The downside risk is that it could be a global recession. One of the key variables is whether supply comes back online in order to add growth and slow down the inflation rate. But this is the sharpest slowdown in 80 years. That's from
so US-30 is in that range now.
Because of the recovery from COVID.
Power move indicator is still there. The cross. So is it going to be a buy? It's going to break. Like I said, whenever you get any signals, you need to wait for the break like this. I would only take the sell ideally if it broke the trend line. Same as this one. It came, we waited, it broke. There's your signal. Sell's got to break. Whole signal. Same with these power crosses. Trend bar. The trend bar's grey. Nothing. We'll see it like it's going to be a buy. Going to bounce off our VWAP look, you can see. Or a sign stochastic smoke green. Breaks this, then you're looking for a buy. Our move is indicated.
There's a lot of inequality in the world, so the advanced economies, and particularly the people at the top in the advanced economies, have done very well over the last decade. So the reason that this is a prolonged risk for the world is that we're coming off of a very exceptionally low period of interest rates. Last year I called it uncharted territory on both fiscal policy, which was massively expansionary, and the monetary policy. So we're coming off of that, And you also have demographics, which are gradually slowing down in the world. Fewer people coming into the labor force, and so that's part of it. And then this core problem of lack of supply and the supply chains not being repaired.
Break were high, we tested on the VWAP look.
Energy is at the core of a lot of the supply. It's what makes fertilizer. It's what makes electricity. And there's as Russia is excluded from this, it means there's a big shortfall of energy, and it's
1
not
minute left.
made
Look,
up for by new supply.
David, as you've pointed out and we've talked about, we're going to see a massive wealth transfer from the commodity importers to the commodity exporters. Within that, we're going to get some financial imbalances.
Nicely.
Now, David, if I was doing this at the consumer level, if a consumer faced tough times, I'd be worried about a loan shark, if you will. Who is that loan shark on the international stage? And I know previously, in previous years, you've been worried about China and some of the loans they've made and the conditions around those loans that have been made to some of the economies that you focus on. Are you more worried about that now with this playing out?
China was the biggest lender during this expansion of the world, lending into countries, both poor and middle income countries. So one of the concerns right now is our data shows that it's 60% of the countries are either in debt distress now or at high risk of debt distress. That's for the 75 poorest countries, the IDA countries of the world. 60% are in debt distress. And with a big chunk of that debt owed.
Brilliant. We just grabbed another quick $10 there. Just on that sell. Why did I sell? I sold when price hit the VWAP. Now it's pushing up. I just wanted to get in and out before the candle finished. So beautiful. A little $10 there just to finish my last trade. Beautiful. Because you find this with VWAP, a lot of people will sell off the VWAP line. Let's see if it breaks the last 5 minutes, and then we're going to end the stream for today. We'll be back to do another one tomorrow. We're going to see if the VWAP is going to be broken and put into a bull run. Had a bull signal, and the push down here that didn't happen. Now price is against.
Are these real suggestions that we can actually act on, or is it just a warning that this is what we're going to face now for a long time?
Those last two trades.
There are immense amounts of available. You know, natural gas is a key component of fertilizer and of electricity, cleaner energy for electricity.
Watch this for the last couple of minutes.
And it's available. It just needs to be announced, and the markets are forward-looking. So if you announced an intention to have more supply now, it would affect prices immediately. But we've seen that that's not happening. Oil prices are way up. I don't know today, $119 a barrel. And so that's showing you that there haven't been announcements of supply. And I don't see that the governments are making steps on that. Canada did announce an ability to increase supply. I think Mexico and the US could increase supply substantially. And Europe itself has energy reserves that they could be tapping, but so far it's not happening.
David, you took us to clean energy, so let's go there. The FT reported recently that the Treasury sent you a letter, sent the World Bank a letter, asking you to increase your efforts to fight climate change and provide what they called more forceful and constructive leadership.
Yes, there you go, look. There's the beautiful, is it breaking? You're tempted, just wait for that candle to finish. You've got 50 seconds. This is the good thing about 3 minutes time frame. You've got to wait 3 minutes.
A UN criticism that was done way back in 2021. You know, there's lots going on in the world that I think would be a better focus.
Yeah, you haven't got to wait a crazy amount of time. Just wait, it's backed off again, you see. Wait for the...
That comes out at every meeting, and it shows in the support from the appropriations process of the U.S., the bipartisan nature of the support for the World Bank. The reason is because we're doing a lot on climate, and I wish the FT would ask what you're doing and what others are doing, and recognize the World Bank has a strong focus on actually reducing greenhouse gas emissions by countries.
He backed off again, so you could have jumped in for another cheeky sell. I was just sipping my coffee. And again, pulled all the way back. So again, you don't want to be taking a buy until it's broken.
We've worked to get away from that, and that's made some of the lobby. There's a big lobby.
Again, look, it's trying.
So they're not.
Price is trying. See, it's kind of a W.
And keep making progress.
Oh, we've got a zigzag indicator on our new system here. Look.
Natural gas supply, and that's critical
can't
for
pick out.
future global growth because it holds down prices.
David, I'm trying to work out if you're more annoyed with the FT for publishing the piece or
Go look.
with the Treasury for sending the letter, but
See,
I haven't got time.
second
David Malpass,
leg.
great to catch up with you, sir.
W.
Thanks for
How
joining us
cool
this
is that?
morning. David Malpass there of the World Bank. Let's get to it in this equity market. Looking ahead to an ECB on
And we could see that. I mean, we could see that, but there you go. This is what we're forming a second leg W. This is why there's a good chance of it breaking the VWAP. Don't know. RSI has now took a steep curve. Oh, should have got a sell there. Again, because I like to see these kinks in the RSI. I'm in. Golden trades. For those of you who can't pick out W's and M's, look, you see. This is. You're looking. Zigzag indicator, automatic. Tweaked for our system, of course. Not just any old one-off trading view. It's all spoke and built. Member of the group. Do it. That was just kind of your second one. See. Reversal price is struggling to break the VWAP. Backed off it. Trap between the daily pivot and scalp between these two levels if you want. Wait, buy. Price is right on. Your price is right on that level. That's what you got to do.
Companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Access the financial world on demand. Hear from leading economists,
556, so value see, down to the new quarters it, that push, cancel.
Start exploring to see what's moving the markets. Visit Bloomberg.com webinars.
Pepsi's Number Fever campaign in the Philippines has probably gone down in history as one of the biggest marketing disasters in history, mainly because of a human error that led Pepsi to print more winning caps than they planned. The resulting chaos caused riots, civil unrest, and even deaths. Reporting this story took over a year, and it resulted in me flying to Manila,
breakout levels,
to meet unlucky winners and to find out exactly what happened back then in the 1990s. My name is Jeff Maish. I'm a journalist based in Los Angeles. I wrote the story for Bloomberg Business Week about Pepsi's Number Fever campaign. The Philippines is a really interesting country. It's made up of thousands of islands, and it's also a country that's very heavily influenced by America. American culture is everywhere you look.
That point,
Philippines. They're obsessed with Frank Sinatra music.
my price has bounced off that level.
They love all things America, and that extends to their
Back to the that
love for soft
read
drinks, Pepsi Cola, Coca-Cola.
moment.
In the
Red
1990s,
size flat. Wait again. 30 seconds.
Pepsi,
Last candle
Coca-Cola,
will be ending the stream.
is now known as the Cola Wars. It was a fierce battle for market dominance.
Great scalping today from the guys.
Already a really popular promotion. It had been rolled out in America to great success. And so Pepsi decided to roll it out internationally, particularly in Asia. They thought it was the answer to their problems. They thought it could finally help them beat their biggest competitor.
Join us again tomorrow for more true scalping. We'll do another live stream. One quick look at news. Tomorrow we've got, well, tonight, like I say, in the trading group, I'll be doing the API oil. And then tomorrow we have
sound like a lot now, but in 1992 that was a phenomenal
balance of trade, euro.
Remember that in the Philippines at the time,
it's going to be down to
average monthly income was about
consumer confidence.
So $1 million pesos was wealth beyond any.
So not a great news day, but we still do the opens and still plenty of world news.
Kids were saving up their pocket money to buy
Thursdays are continuing. Flames as always, trade, and finish the week off on Friday. More inflation, everyone's waiting. EPR, print, and Michigan consumer sentiment were big recently. That ends our week, so that's the news. Not a massive news. It's always a bit of a week after P. Successful. Again, watch US-30. See how this plays out.
Number fever quickly became
Gold. Completely
Maids were being
blown out.
jailed for stealing their employers'
Nice one, a rejection again off breakout line.
Murders over winning bottle caps. People were fighting in the streets over these caps. There were signs that.
Thank you all again for joining me. That's it. We've done best part of 2 hours. Successful stream. Again, go to the website www.mohawk.com if you want to do scalping, access to our system and the mentorship. Till the next one tomorrow. Trade safe all. Take care. See you later.
The campaign in the Philippines.